I think the Fed is being quite disingenuous when it comes to the Fed statement released a short time ago. The Fed wants to update its economic outlook. It wants to highlight, you know, labor market continues to strengthen, solid rate of economic activity, yet it wants to continuously point out the fact that the Fed will remain accommodative. If the economy was, rising at a quote unquote solid rate, why are we at 125 bips? Why is the Fed hiking at such a slow pace? I mean, the Fed should have been hiking 6 years ago. I mean, the fact that the Fed wants to try and cherry pick these data points and, put out this narrative of, everything's awesome, but then remain, quote unquote accommodative, means that the Fed is being disingenuous, because the Fed knows that if they hike, which is largely considered late cycle, if they hike, it all comes down. So they are trying to try to bring forward as much growth as they can by leaving rates at such a low level. I mean, if the Fed was really worried about the next recession, or if it was really worried about, this risk or that risk, they would be at, 3%, 3.25%, but we're still at 125 bips. That's nothing. That's not hawkish. That's not, a tightening cycle. I mean, the Fed wants to, highlight labor markets that continue to strengthen. That's disingenuous in the sense that it only shows part of the situation. On a month-over-month basis, yes, the economy is adding jobs. However, if you go below that surface, something we've been pointing out for the last 2 years is that non-farm payroll growth year over year has been on a steady decline, since its cycle peak in February 2015. For example, February 2015, non-farm payroll growth peaked at 2.3%. Currently, it is at 1.2%. Nobody is saying this. Nobody is mentioning the decline in growth for non-farm payrolls. Okay? What is more remarkable is, since the election, despite all this, optimism and this hopium, MAGA, non-farm payroll growth has declined 0.5%, within the last year. Now, could that change, with the upcoming non-farm payroll growth? It could. We could get a snapback from, what may have been affected from the recent hurricanes. However, if you look at the trend, it's quite worrisome. I mean, nobody is mentioning that at 1.2% non-farm payroll growth, we are at levels not seen since July 2011. Okay, so we're at almost a 7-year low in non-farm payroll growth. What is more remarkable that nobody's paying attention to is that we want to see wages continuously increase, and the Fed has repeated that market-based inflation compensation gauges still remain low. Now, if you look at previous cycles, that is true, but we can say that this current cycle, since the financial crisis, is not a typical economic cycle. Now, if you want to overlay non-farm payroll growth year over year with non-supervisory wages year over year, and that pretty much incorporates roughly 60% of the U.S. labor market. What is interesting is as NFP growth peaked in February 2015, wage growth bottomed in both of them have been inversely correlated since, which indicates that higher wages is dragging on job growth. So if wages continue to be forced higher, which is commonly seen in late cycle movements, if wage growth continues higher, we're going to see job growth continue lower. I mean, what is astounding that nobody's pointing out is, we want to see, the Russell 2000 at all-time highs, all this optimism, all this, talk about how Trump's going to, make small business great again. We are seeing, small business growth, non-farm payrolls drop dramatically. I mean, if you just look at small businesses that employ 1 to 19 employees, their growth is barely treading 1%. And, if you look at a broader gauge of small business, 1 to 49 employees, I mean, they're barely staying afloat above, 1.25%. Meanwhile, as small business, optimism remains, at, decade highs, earnings continue to decline. Job growth continues to decline. There's a vast divergence between the soft data and the hard data. Everybody wants to look at the optimism because that's the feel-good stuff. But nobody wants to point out the fact that, the underlying fundamentals continue to decline. And I think it's highly disingenuous for people to only point out the good stuff